No one likes to misplace cash. That's why we all use banks to keep our money safe. But what about when banks lose your money or collapse? Yeah, that's a whole different story. It makes headlines, the stock market crashes, and that's only the beginning. We've had several bank failure instances recently, and in this video, we'll go through the top 10 biggest bank collapses in US history. Number 10. Guaranty Bank. Starting off our list is a bank collapse on August 21, 2009. Guaranty Bank was one of the biggest banks in the nation, operating out of Texas and California, with a total of 162 branches in the two states. It's hard to say no one saw this collapse coming though. In the 2 years before the collapse, Guaranty Bank was spun off once and raised $600 million in capital to keep the bank going. However, in 2009, real estate markets began to plummet. Particularly in California, borrowers defaulted on their loans, and at the end of the day, Guaranty Bank was left holding the bag. The bank collapsed with $13.5 billion worth of assets, and despite efforts from groups like BBVA Compass to buy the bank's assets, Guaranty hasn't found its way back. Number 9. First Republic Bank Corporation. We're still in Texas, but this was a couple decades before. Back in the late 1980s, First Republic Bank Dallas was outrightly the largest bank in the Southwest, holding 20% of all loans made by commercial banks in Texas. First Republic Bank also had more than 40 bank subsidiaries when it was taken over, but they were struggling to manage loans and stay on top of new developments, and eventually, it broke the bank. Sure, there was a merger with another bank in Dallas, InterFirst Bank, in 1987, but by then, it was too little too late. And in July 1988, First Republic Bank collapsed in the FDIC's first operating loss. With $17 million in total assets at the time of collapse, the bank was sold to NCNB in Charlotte, North Carolina, and has now become what is known as Bank of America today. Number 8. Colonial Bank. Another collapse as a result of the 2008 financial crisis. The Colonial Bank was located in Montgomery, Alabama, and had grown from just $166 million in assets in 1980 to over $25 billion and more than 350 branches in 2009. But the success story quickly soured. Too much investment in Florida real estate and construction was a major reason for the collapse of a bank with $25 billion worth of assets. Not only that though, Colonial had more than a couple of dirty executives like the senior vice president, Catherine Kissick, who would later plead guilty to a $2.9 billion fraud scheme. Lee Farkas is another name that got jail time for some fraudulent activity that led to the collapse of Colonial Bank in August 2009. Number 7. American Savings and Loan Association. The failure date, September 7, 1988. The location, Stockton, California. American Savings and Loan was founded in 1922 and specializes in consumer-facing products like personal mortgages. But after over 60 years of successful operation, the bank had a bad run on deposits in 1984 and never found its way back. The American Savings and Loan Association went from being the largest thrift in the U.S. to becoming one of many bank failures during the 1980s and 1990s broader savings and loan crisis. With $30.2 billion in assets, the Robert M. Bass Group sold the thrift in a rather controversial deal and eventually ended up under the ownership of Washington Mutual. Number 6. IndyMac Bank. Coming in as the 6th biggest bank collapse in U.S. history, IndyMac Bank, based in Pasadena, California, is really the poster child for everything that contributed to the 2008 financial crisis. And being one of the largest mortgage lenders with more than $30 billion of assets at the time of its failure, IndyMac was one of the biggest victims of the real estate crisis. For this bank, it was really a quick downhill slope. As soon as rumors of the collapse surfaced, more than $1 billion in deposits were withdrawn in just under 2 weeks. When it all came crashing down on July 11, 2008, IndyMac became the first major bank to close amid the 2008 mortgage crisis with $32 billion in assets and $19 billion in deposits. Number 5. Continental Illinois National Bank and Trust. The oldest bank collapse on our list was when Continental Illinois National Bank and Trust failed on May 17, 1984. Most would have expected it to be the biggest bank collapse ever. Boy, were they wrong. Unlike most other banks on this list though, Continental crashed due to its purchase of loans tied to the oil and gas industry from Penn Square Bank of Oklahoma City that failed 2 years prior. Gas prices were plummeting. Customers with deposits over the then $100,000 insurance limit heard rumors of a possible collapse, and as you'd expect, they all withdrew their funds. In a matter of weeks, the bank collapsed with all its $40 billion worth of assets. A decade later, Continental Illinois was finally sold to Bank of America. Number 4. Signature Bank. At number 4, we have one of the 3 most recent bank collapses in the US, and guess what? They're all connected. With headquarters in New York, Signature Bank was the nation's 29th largest bank. But if you knew anything about cryptocurrency, you knew it was a matter of time before the bank closed up. The management had taken a strategic yet risky decision to serve the crypto industry and had about 16% of the bank's deposits from that industry. Signature Bank was clearly overly reliant on the cryptocurrency world, and when the sector crashed late in 2022, the bank lost virtually all of its deposits. As expected, the board fought to keep the bank afloat, but the FDIC wouldn't take any chances, and Signature Bank was closed on March 12, 2023, with all $110.4 billion of its assets. Number 3. Silicon Valley Bank. Just 2 days before Signature Bank's collapse, Silicon Valley got shut down in Santa Clara, California, despite having $167 billion in assets and $119 billion in deposits and being the nation's 16th largest bank. With a foothold in the tech industry, Silicon Valley was on an upward trajectory starting from 2018, but due to poor management, watered-down regulations, and lax oversight by the bank's own staffers, they couldn't maintain the trajectory for long. Eventually, in March 2023, the Federal Reserve and the FDIC had to step in to prevent further harm to the national economy. Finally, on March 10, 2023, Silicon Valley Bank was shut down. And like a set of dominoes, Signature Bank followed suit, and then. Number 2. First Republic Bank. Don't mix this up with the 9th bank on our list. This First Republic used to be headquartered in San Francisco and had $229.1 billion in assets at the time of collapse. This institution focused on serving wealthier clients and worked well until it didn't. First Republic began struggling as soon as Silicon Valley Bank and Signature Bank both failed in March. First Republic even got support from a group of large banks, including JP Morgan Chase, Bank of America, Wells Fargo, and Citigroup, who parked $30 billion of uninsured deposits at the institution, but it didn't make any difference eventually. And a few months later, the bank was shut down with over $104 billion in deposits made and total assets of $229 billion. JP Morgan is now reported to assume $92 billion of First Republic's insured and uninsured. Number 1. Washington Mutual Bank. At the top of our list of the biggest bank collapses in U.S. history, we have the Washington Mutual bank failure in September 2008. And it's the biggest by a wide margin, having crashed with assets worth $307 billion. You guessed right, it was during the housing market crisis, but WAMU's collapse was worsened by the collapse of Lehman Brothers. Customers withdrew about $17 billion in assets in less than 10 days after learning of the failure. Washington Mutual had little sympathy from the government. Thus, instead of government bailouts, the bank was seized and sold to JP Morgan for $1.9 billion. Which of these do you find the most shocking? Let us know in the comments section.